Hey guys, how's it going? Good afternoon. This is the weekly K2 mentoring session. So I'm gonna go and set up this room real quick. And then once this is all set up, we can get started with our mentoring session. So let me just get everything all set up real quick. Shouldn't take too long. Then we can get started with all of the questions for today. All right. That's good. All right, solid. Let me get this link sent out to all of you guys here in the premium. All right, so here we go, guys. I'll give it a few minutes for people to make their way in. Hey guys, how's it going? All right, people are making their way in right now. It's 1:58, so I'm a little early, but people will start joining and then we can go over questions today. Let's clean this up. All right, guys, I'll give it some time. If you guys have any questions, feel free to put them in the chat. I'll remind everybody once people make their way in. People will start trickling their way in right now. So let me just clean up the charts. So not sure if you guys caught that mid-market reversal today, but it played out pretty nice. The daily will be at full TP as well. I'll give a little update right here for that. Let's see. All right. So I wasn't even following it, but there we go with the full TP off the daily. So I'm not sure who caught that, but it played out pretty perfect. Little to no drawdown, straight to full TP. Pretty solid. All right, guys, it's 2 o'clock. I'll give it a few more minutes for people to make their way in. Good afternoon, everybody. If you guys are new here, basically, if you guys have any questions, feel free to put your questions in the chat. I'll answer whatever questions you guys have. This session is basically for you guys, like pretty much whoever's here that has questions. So don't be shy if you guys have anything that you guys need help with. If there's any strategies you want me to cover, any indicators you want me to explain, anything about risk management, FTMO, funding, anything like that, I can help you guys out. Our first question from today is asking if I can discuss how do we use liquidity areas with our trades, or how do we make entries off those liquidity areas. I'll go over that shortly. And after that, we can go down the questions. Hey, Brock, how's it going? All right, so there's only a few people in here. Let me give it a few more minutes just for people to make their way in. I don't think everyone's aware that the live is now going. John's asking, I can use SR as liquidity, right? So I mean, technically you can, but I wouldn't use the SR. I would use the high lows. The SRs aren't necessarily liquidity zones specifically. You'd probably be better off using the high lows. I mean, the high lows are easier to identify too. The problem with the SRs is that they don't become established until they've been tested more than twice. So the thing is, if those SRs haven't been tested, there's not going to be any SRs there. So like using this for an example, so these areas haven't been tested. So it's impossible for these to be SR zones, right? So if you can identify these as SR zones, you're not going to have anything there to look at. You're better off using the high lows because these haven't, well, this one's been tested, but it's past, above it. But these don't specifically identify as SR zones. Deshaun's asking, so I'd wait for the high low to confirm, then mark them up. Yeah, you can do that, or you can mark up the pending ones as well. So it just depends on what you're looking for exactly. So I mean, if you want to be right away to identify specific SR, not SR, high lows, you can just mark them up as they're still pending. Like for example, right here, we have a high low here. And if you were to line this up with like this one down here, it would still be pending, but this would give you a better idea as to like where the liquidity is already sitting, right? Because it's going to take about 5 candles for it to establish. If it comes down like on the 4th or 5th candle, you can already identify that, liquidity is going to be hit. So it's really up to you, personal preference, Dejan. I mean, for me, I use them as they're pending. I don't necessarily wait for them to establish, but you're right. If you wait for them to establish, there'll be a better confirmation, but it's not necessary to wait for them to establish. Yeah, I mean, it's just up to you how like if you want to have like that head start, then it's best to mark them up before they even establish. But if you do wait for them to establish, they're going to be a lot stronger. So definitely something to keep in mind. Let's see if there's anything here. All right, so we have another question here from Chris. I'm going to start off with the first question for today. Some other people have asked me if I can go over the liquidity zone. So I'm going to go over that first. Chris's question here is asking, hey, Sean, I'm new. So looking to find out how these indicators work. And I've heard you say the V3 basis, et cetera, on the lives. Yeah, so I'll go over the indicators for you, Chris, because I know you want to see how each indicator works. Actually, I'll probably start off with that first. I'll start off with all of the indicators. Let me make a list here real quick for the things I'm going to cover. So topics to cover. Start off with the K2 indicators. And then after that, I will go over the V3. And then after the V3, I will go over how liquidity zones are used, or liquidity areas are used with these strategies. Because the thing is, the liquidity areas aren't, it's not a strategy. It's just used to identify where you can hold on to the trade longer than you normally would. So I'll go over that, how I use them. The reason why I'm going after the V3 is because I generally use the liquidity areas in conjunction with the V3. The V3 is going to be the entry, but I hold on to the trade longer than I normally would because there's liquidity in that area. So I'm going to start off with that. So, hey, Patrick, good afternoon. Oh yeah, definitely. Brock said, lost my first trade off my 100K FTMO leveraging issues, but I've ensured not to trade alone. I'll wait for tomorrow's session. Yeah, that's probably the best idea because I don't even trade after 8. Once I get off the live session, I'm usually done. Sometimes I'll sneak in a few trades, but for the most part, I just focus on everything we do during the live because usually after is when the bad trades happen. So that's why it's kind of best to just focus during a certain time period and lock in some solid trades during that time. Kevin wants me to go over the high low. Yeah, definitely, Kevin. So, all right, guys. So here are my current topics for today. If you guys have any other questions, feel free to put them in the chat. I'll add them to the list here. The first question is going to be going over the K2 indicators for Chris. He wants to see basically what each indicator does. And he also wants me to cover the V3 strategy. So I'll go over that. We have a lot of strategies, Chris, so I don't think I can go over every single strategy today, but we have these group mentoring sessions weekly. So I'll try to cover as much as possible. Mainly the indicators, after that, the V3 strategy, because that's what we mainly apply, the V2 and the V3. After that, I'll tie in liquidity areas and how I use them in conjunction with the strategies. And lastly, we're going to cover the high-low strategy. If you guys have any other questions, feel free to put them in the chat. I'll add them to the list, and then we'll see how long this goes. But yeah, I'll try to cover as much as I can today. So, all right, first question is the indicators. So let me just turn everything off here. I want to make sure all the indicators are on my list here so I can show you guys how everything here works. Let me take off this stuff that I don't necessarily use. Trying to see if I'm missing anything. We have the K2SR. The first SR is going to be on there too. See if there's anything else that I'm missing here. I think that's about it. All right, so we'll start off with the momentum indicator. We'll just go bare basic momentum indicator, right? So turn this on right here. What the K2 momentum indicator does is it identifies momentum swings in the market, Chris. So like for the first, so just looking at it, let me just go over here real quick. So as you can see right here, let's go like to a time when volatility is actually kind of high because it's kind of slow right now. Just want to show you. So this is one indicator, but this can be used in conjunction with other indicators. They're not meant to be used on their own. So each strategy uses a handful of different indicators. For this indicator right here, you can see that it identifies momentum swings. So like, for example, here we have a green candle with a green signal within it. With that said, it's going to identify that momentum is swinging to the upside, right? Again, right here, we have a red candle with a red signal. This is going to identify momentum is swinging to the downside. Same with this over here, swinging to the upside. And then again, right here, slightly to the bottom before swinging right back up. This indicator here is meant to be used with a trend indicator. So there's a couple different trend indicators that we use. The first one here is going to be the trend meter below. So this is what I mean about tying them together. So if you have the trend meter down here, basically this trend meter will give you the trend depending on what settings you have it set to. For scalping, I have it set the same as chart so that I can see what the current trend is for the 1 minute time frame. If you want to see what the long-term trend is, you can set it to the defaults, which is going to be set to intraday settings. So if you set it to a default right here, it's set to the 30-minute, 1 hour, 2 hour, and 4 hour. So if you want to know what the intraday trend is, you would use these settings here to identify what the trend is looking like. It's not going to work well with the 1 minute because you're just looking on the shorter time frame. If you're looking on something higher, like the 4 hour over here, then you can identify what the overall trend is. If I set this to default, you can see here that on the higher time frames, it makes more sense, right? You match a momentum sell with a bearish momentum, and you take the sell there, and you can catch a huge move right there. So these indicators aren't meant to be used on their own. They're meant to be used in conjunction with each other, depending on which strategy you plan to apply. So there goes the first indicator right there, the momentum indicator. The second indicator, I'll just go back to the trend meter here. As I mentioned previously, I have it set to same as chart because we're using this for scalping. As you can see here, when the trend meter changes, so right here, you can see it's green, right? Instead of having to draw trend lines, you can just look at the trend meter down here and you can see that price is trending up when it's green, right? When price turns blue, or when the trend meter turns blue, this identifies that price is currently indecisive. So it can be changing from a bullish trend to a bearish trend. And as you can see right here, it turns red for a little bit. And you can see from that point, price is trending down. It turns blue again right here because price is consolidating. So these indicators simplify what you're looking for. I mean, obviously you can use different things to identify the trend. You can draw your own trend lines if you want, but you don't have time to do all that work when you're identifying these entries here. So instead of doing all that work, the indicator does the work for you. So instead of having to draw a trend line there or a channel to identify the trend, you already have the trend meter identifying where the trend's going. So right here, you can see price is going up, trend meter is green, price is going sideways, trend meter turns blue, trend starts to go downwards, trend meter turns red, right? It's pretty simple and self-explanatory. The next indicator over here that I'll go over, well, let's go down the list, would be I'll go over the K2SR1 first, because this is the original one. So basically what the K2SR indicator does is it identifies the support and resistance on the chart for you. So as you can see right here, this red line here is a resistance. This green line right here is the support. So as price continues to move along, these indicators will adjust with price. So as you can see right here, the resistance adjusted to this lower level. The SR1 only identifies what the current support and resistance is. So as price moves along, so will the K2SRs. So price is broken above it. The resistance is now up here. Price is pushed below here. resistance support is down there. And as you can see, price just continues to adjust. Over here, no resistance or support has been established, so there's nothing that's moved. But as price continues to move along, it creates a new resistance up here. So these automatically adjust as price goes along. And you can see right here, price kind of tightens up a bit. Right here, this is a support, this is a resistance. As price comes up and breaks this resistance here, it's going to automatically adjust. So price pushes up, hits resistance. This resistance has now moved above higher because this is no longer the resistance. This is now the resistance. So this stuff here automatically adjusts for you. This is the original SR indicator. We created the second one after because one problem was that people wanted to identify what the other support and resistance was, right? Because you can see how it adjusts on the level one, but what people wanted was to identify what the other support and resistances are. So I'm gonna turn this off and I'm gonna turn on the version 2. So version 2 is similar to version 1, except it leaves the other resistance and support on the chart. So as you can see right here, there's a lot of support and resistance. As price moves along, it automatically adjusts as well. When there's new support resistance that's created, the old ones will disappear. So it pretty much just gives you what is the most current support and resistance. So if you scroll around, you can see that price respects the support and resistance points all throughout the chart. You can see price comes down. The support was already drawn up from here. This support was drawn up from over here. This was drawn up from over here. So as you can see, price goes and retests them. And this will help you identify where support and resistance is without actually drawing them up. So the price continues to move along. There's no support and resistance here because price hasn't been in this area. If you zoom out, price hasn't been in this area for about a day. So no support and resistance, but as price continues to move along this area, it's going to create new support and resistance around there. So again, right here, there's nothing there. Now support and resistance has been created in this area. The older support and resistance was pretty much deleted because there's only so many zones that can be on the chart at once due to TradingView settings. Again, right there, new resistance, these over here are starting to disappear because new resistance is being created around this area. So as you can see right there, these are disappearing because price is so far away from it, it's irrelevant at this point. And as price continues to move along, new support resistance is created. All right, so that's enough for that indicator. Next indicator would be the pivots. The pivots indicator here identifies different things. It can identify the trend. It can also identify rejections of price. That's why it's called the pivots, because price will pivot off these points. So as you can see right here, price bounces around and you can see how it rejects right off the pivots. Each pivot has a level. If you go to the settings here, pivot 1, 2, 3, and 4 will be increasing in levels. So level 1 is going to be the weakest pivot. Level 2 is going to be the second strongest pivot. Level 3 is going to be the third strongest pivot, and level 4 is going to be the very strongest pivot. So one way to use this is to identify when price bounces off it. Like I mentioned before, you can use this in conjunction with other indicators. You can use the trend meter to match up the trend. If the trend is bearish for the pivot and bearish for the trend meter, then it's probably going to be bearish. Again, turning on the momentum indicator right here, if you have momentum coming down and you can see it's below the pivots and the trend meter is red, this can identify that price is likely to come down further, right? So if you were to take a trade like that and you let it run, full TP, right? It's pretty simple. I mean, there's different strategies you can use. This would be considered the pivot strategy. So depending on what you're applying, this is one of the KT strategies that you would learn, obviously. But yeah, so back to what I was saying earlier, I'll turn this off as well. The pivots can be used to identify rejections in price. It can also be used to identify the trend. So when price is below the pivots, it's trending down. When price swings above the pivots, so it hasn't done that yet, it's still below it. Price is in a downtrend here. When price swings above it, meaning it pushes above it, it retraces, comes back up. So like right here, you can see price, right here was a fake out. Price came up, came for a retest, but it came down. Right here, price came above, retest, it tested the pivots again right here, gave it 2 retests. It shifted from a downtrend to an uptrend. So this can be used to identify when price swings from an uptrend to a downtrend. And those are the 2 main uses for the pivots. Another way that you can use the pivots to help identify market structure is to see when price is bouncing in between the pivots. So if it's bouncing in between the pivots, it doesn't necessarily swing to the upside or swing to the downside, this can identify that price is indecisive and consolidating or ranging, whatever you want to call it. But you can use this to identify market structure as well. So right here, price is trending up, price is consolidating, price is trending down. Different ways to use it. Just depends on how you want to use it. Next up, after the pivots, we have the K2 sessions indicator. What the K2 sessions indicator identify are the previous session high lows. So it's not going to update right now because obviously, you know, we're back in time. Let me see if I go back a little further, and it's not as useful on the lower time frames, but you can see right here. So if you go back to February 15th, yesterday, this would be the Asia low from the previous day. This would be the Asia high. This would be the New York high, and this would be the London high. So it's pretty self-explanatory as to like what it's used for. It just identifies what the previous session high lows are. Next indicator here would be the high low. And this is pretty self-explanatory too. So basically what this indicator does is it identifies what the previous high lows are. So right here we have a high, right here we have a low. Again, right here, you can see that it takes a while for it to establish. So this indicator does repaint. You have to wait for about 5 candles for it to establish. So this was established because this wasn't retested within 5 candles. Same with this up here. So again, right here. Sorry guys, let me sorry guys, I didn't do that. Anyways, back to what I was saying here with the high low. You know, it's pretty self-explanatory. All it does is it identifies the highs and lows. So we have low here, high here, low there, high there. There's different ways to use this. One way that a lot of us use it for is to identify liquidity in the market. So one way that I would do that is to show you an example from yesterday. And this is pretty much it with this indicator right here. So I'll go over your question in a little bit, Whitney, because I see your question there. I'll add it to the list. But short answer to your question is that it doesn't matter what session you're trading in. I mean, the high lows still matter. I'll go over it in detail later. So let me just I'll come back to your question. I just don't want to get too tied up and then miss the other stuff that we need to cover right now. So let me just add that to the list here. Let me scroll over here real quick. All right, so I have one question from Barack. I'm gonna reversing the mid-market reversal. And then Whitney over here, I'm going to add you to the list too. I just don't want to get tied up because once I go over like someone else's question, I go off track of like what I was going over. But let me just add you to here. Whitney wants me to go over why sessions matter. Okay, so let me go back to what I was discussing. So here with the high low, I'm going to explain liquidity or how we identify liquidity here. Let's go to yesterday's market when we took the, okay, I'll just move forward. So right here, okay, so this is when the market opened at 6:30. And I'm gonna use the V3 example here as well. So basically, if you guys have been sitting in on the live sessions each morning, before the session starts, I mark up all of the high lows to identify where liquidity is sitting. So this high-low indicator here can be used to identify where liquidity is sitting, because a lot of people, when they enter trades, where do they place their stop loss? They place their stop loss at the previous swing, right? So if people are taking sells, their stop loss is sitting at the previous swing. So here's an example right here. Let's go over this. And this is how we use liquidity to identify when we want to hold a trade longer than we normally do. So in order to identify a V3 entry, which I'll put the requirements over here. Let's see if I can put this up right there. Okay. So the V3 variation, let me see if I could find an entry here. Real quick. So trying to remember, why did we take this trade here? I don't know if that high low came or the V3 came before. Let's see. Trying to identify, because I know we took the entry here. You know, I think this entry right here we took because we didn't wait for this candle here to close. I think this was an incorrect V3. Oh yeah, it was, because we were looking for this low here, but this candle like randomly spiked down and it established a new low. So technically this wasn't a V3 entry. This was, we entered, but it was, I think we entered it as a breakout or something like that. I'm trying to remember. Sorry, we take so many trades, I don't remember what the reasoning was for this. But my get, like going back and just seeing what I can see here. So one thing that I can see here is that we probably would have used the V3 here, but I think on this candle here it was very volatile because it was the opening candle for the market 630. So on this candle right here, I think we weren't paying attention if this low was established, because this was technically the low right here. And I don't think we noticed that this candle actually spiked below it, because technically if this wasn't the low, this would be the low here. But this candle spiked and then came back up. And then I believe we just entered it right there because it was, we were anticipating it to be a high low, or not a high low, V3. So with the V3 right here, let me see, I do have the markup here from yesterday. Yeah, okay, so we did identify this. Wait, why does the candle look different here? It's weird. Huh. This was a 15th. That's so weird. So like like rewinding it here, the candle actually looks way different. Okay, so this was actually a V3 entry. So I have the markup here. I don't know why it looks so different. That's really weird. Because right here, you don't see that little candle, but I have the actual screenshot from when we took the trade. So this was a V3 entry. You can see that the high low right there was established. For some reason right here, it's not showing that. This was technically this is on the 15th. That's really weird. I've never seen it do that before. You can see that the candles here. So I have the timestamp here from these. Our entry came up right here at 6:30. The 6:30 candle right here was a red candle, but looking at the replay over here, it doesn't show that. It's totally different. So anyways, we'll keep using this as an example. Basically, just see this as a V3 entry. I know it doesn't look like it here, but from the screenshot yesterday, it was obviously a V3. Barack said they probably manipulated and forgot to wipe their tracks. Yeah, it's so weird because this is the same exact chart, same exact data, same exact day, February 15th, 6:36. Yeah, this is the same exact move there. It just doesn't look the same. All the candles look different, actually. Even these candles up here. This was a green and it was followed by a red, like hammer, and it didn't show right there. Yeah, I mean, we'll just use this as the example, but basically, this was the entry that we took right here. And basically, if you're using the normal requirements, you're going to put the stop loss at the previous swing, which would be let's see, Whitney said, yeah, no, this is the same one, Whitney. So Whitney said when you type in, because you can see right here, this is currency.com data. I don't change the data is set. It's currency.com right here. If you look at the screenshot, it's currency.com. So this is the right data. It just doesn't look the same. Yeah, because I never changed the data. I always use currency.com. But anyways, back to what I was saying. For the V3 here, you'll enter and you'll put your stop loss at the previous swing, which would be somewhere around there, like 25. Or we'll just use like the built-in. So I think what we did here is we used the wider stop loss because that's so weird. Yeah, because the stop loss here was like 450. So let's see. This is what our TP stop loss was looking like on that day. I don't know why the candles here look way different, but anyways, we'll use this as an example because this is pretty much what we were trading off. So looking at this right here, guys, basically this would be a V3 entry. I know it looks weird because it doesn't fit the requirements, but this is how it was supposed to look yesterday. Anyways, we took the trade here. And when I use liquidity is for this right here. So when price pushes above here and hits liquidity, what I look for next is I look for price to push up to the next liquidity zone here, right? Or liquidity area. And then when price hits that, I expect it to keep pushing up to the next area. It doesn't always push up to the next area, but this is how I let my trades run. So basically with this trade here, what I did was I took off my TP because you can see as soon as price hit liquidity, it shot right up to the next area right there. So right here, I took off my TP. I had no TP and I just trailed my entry. Instead of just pulling out at TP, I knew it was going to hit liquidity, so I just held on to it. So price hit liquidity, it pushed up right here. And instead of me moving or exiting in profit, what I did was I just kept moving my stop loss above. So like right here, my stop loss was moved in profit below this line right here. And I'll color that red so that you can see that's where my stop loss was set. And then as price continued to push up, right here, we had another wick. I moved my stop loss right there. Price pushed up again a little further. I moved my stop loss right there. And I just kept trailing it because I knew that when price was hitting liquidity here, it was going to keep pushing up higher. So that's how I use liquidity to hold on to my trades longer than I normally would, following the requirements. This is more of an advanced way to trade. If you guys can you guys will figure out eventually. It's not if you guys can, it's when you guys can, because I do this every day. So you guys can identify when's a better time to hold a trade. So price hits liquidity again right here. And then I move my stop loss higher as it continued to push up. So again, right there, it pushed up. I moved my stop loss right there. And then as it came down, it stopped me on profit. That's how I locked in all my profit that day. Because this trade right here, I held it all the way to the top right there. And I locked in, 11,000 off this account because I caught the whole move here instead of just going for the smaller profit. Technically, I was supposed to lock in about 4,500 because if I took the TP, which is right here, this would have locked me in 4,500. Instead of me doing that, I just trailed the entry and I kept pushing it higher and higher. And that's pretty much how I would use liquidity with my trades. So let me go to another example to show you the V3, Chris, because I know this isn't a good example. It doesn't show you exactly how it's supposed to look. But that's how liquidity is used with the trade that you're technically already in. So, all right, let's see. We got one over here. This is a V3 right here. I will put the requirements over here. This is a better example because this is actually set up properly. All right, so again, for the V3, you want to identify the K2 high-low using the high-low indicator. So for example, here we have the high over here and we have the low below here. Let's change the color back to blue. All right, we have the high here and we have the low right here. Second, you're going to look for buys. When you're looking for buys, you're going to look for a low with the red candle. Vice versa, if you're looking for a sell, you're going to look for a high with the green candle. This wouldn't qualify for it, but obviously this one would right here. So right here, we have a low with the red candle. We identify the low. Third requirement is the following candle needs to be opposite. So right here, we have the low with the red candle. The following candle is a green candle next to it. So that's going to fill requirements 1, 2, and 3. For number 4, you need to confirm that there's a pending momentum in that direction. That means that there's a pending momentum signal that's going in the direction of your trade. Since you're looking for a buy here, your pending momentum signal would be a buy signal. So we have a sell signal here. Every signal is going to be opposite of each other. So if we have a sell signal here, next signal is going to be a buy. That's going to indicate that the 4th requirement's met. So right here, requirements 1 through 4 have been met. Next, you're going to set your TP right here, or you're going to set your entry actually. Your stop loss is going to be at the previous low, which would be right here. Sometimes people will use, they'll put it a little farther back or just round it up to the next number, so the next whole number. So instead of 18, which is 180 pips, some people would set it to maybe 20 pips or 20 points, which is equivalent to 200 pips. So with that said, you have an entry right here. One thing that we haven't technically implemented officially is we generally want liquidity we want the stop loss to be at least 300 pips. It's going to really vary depending on the market conditions. For here, this is pre-market, so this would be sort of okay. to have a smaller stop loss than what we normally would require, because the liquidity and the volatility is a lot lower pre-market. Market doesn't open until 6:30 for the New York Stock Exchange, which is when US 30 is actively traded. So this would be market open. In this situation, we would disregard that requirement. It's not always going to be disregarded, but it just depends on the conditions. If market's moving slow, then you can lower your stop loss. If market's moving fast, you want to increase your stop loss and make the move a bit bigger. So with this set right here, this would be the entry. And then if you let it run, there you go, full TP. That's pretty much how this strategy is applied. Pretty simple. So going over the questions, let's see, Aina is asking, so with this, we do not care about the trend direction. Same question with Whitney. So for this strategy here, it doesn't require, keyword require. It doesn't require that you trade in the direction of the trend. But obviously, if you want a high quality trade, you want to trade with the bias, right? We trade every trade with the bias during the live because we don't want to take low quality trades. So as you can see right here, the trend is a sell, but you can still take trades in both directions. It's up to you whether you want to trade with the bias or not. Obviously, if you're trading with the bias, you're going to have a higher quality trade, but it's not required. So it just depends on you as a trader, how you want to trade. If you want to be a risky trader, then you can take trades in both directions. If you want to be a more of a trader with a higher win rate, like me personally, I don't really lose very many trades. You trade with a bias. So it's really up to you. It's your account. It's the way that you want to trade. Some people want to trade risky. Some people don't. I've been trading for a long time. And the way that I see it is that it's better to trade with higher quality trades than taking like 100 trades and missing like 20 of them, right? I'd rather take 100 trades and have them all win versus taking 100 trades and having 20 losses. So it's just really up to you guys how you guys want to apply it. But you can see here that the strategy works both ways. So when I do recreate the videos, which I haven't done yet, you want to finalize these strategies here so that I can give you guys different options, right? So for me, if you want to trade how I do, very conservative, but win almost every trade, then I'm going to require that there's a bias. If you want to trade riskier, then you can trade both ways. You can see here that it works both ways. So like, for example, here, let me see if I can find another trade here that goes with the bias. So this right here, there's no bias. Let me go over here real quick. I'll go to this one because this is another entry here. Just using this as an example. Right here, there's no bias because trend mirror is blue. You could have taken this trade if you wanted to be risky. And this would have been a full TP, obviously. So it just depends on how risky you want to be, right? If you want to take these here, let me see if I can find one that goes with the bias. So right here, this one goes with the bias. So depending if you're looking for, quantity over quality, I'm quality over quantity, but some people want to take, a lot of trades. Some people just get addicted to trading and they want to take every single thing that comes up. There's no problem with that, but expect to run into losses if you're going to take risky trades like that. So again, right here, this is one that's with the bias. So I trade with the bias. If I was looking at this here, I would have personally taken this because this goes with the bias. We have a trend to the upside. Trend meter is green. We have a buy entry here. We take it. It's basically a guaranteed win at that point, right? So it's just really up to you guys if you guys want to use it. I try to keep the table open because not everyone wants to be as conservative as me. But if you want to have more of a better chance of hitting all of your trades, then you would want to trade with the bias. So yeah, hopefully that answers your question, guys. It's not required to trade with the trend, but me personally, I would require it. And those are pretty much the trades that we take on the live. All right, so other than that, let me see if there's anything else that I'm missing here. Oh, it's so weird. So Fahad said on his trading view, it actually looks proper. I don't know. I don't know what caused my trading view to look like that, but it's okay. Other than that, let me see if there's anything else that I'm missing here. I just want to make sure all of the questions were kind of covered here. Chris is asking if they work on all pairs in gold. Yeah, they work on all assets and all time frames. It just depends on what you want to apply it for. Like if you're trading an exotic FX pair, you're probably not going to get good entries because volatility is low. One thing to keep in mind is that all these indicators are based off momentum, right? These are all momentum-based strategies. So If there's no momentum in the market, you're probably not going to find any good entries. If you're trading something like gold, US 30, any other indice, volatility is high. You're going to get a lot of momentum with those types of assets. So you'll find better entries trading those. So what I would recommend is if you guys want to trade this on something other than US 30 or the major Forex pairs, then to test it first. Test it first or ask in the group who's applied it on that asset. I'm sure there's been a lot of people in the group who applied it on that asset because everyone here trades something different. I've only tested it on US 30 and majority of Forex pairs, but like the new strategies now, that scalping ones are mainly based off US 30. So even though they do work on other assets and timeframes, for me personally, I can only tell you that they actually work on US 30. So yeah, I mean, if you want to go and test them, you're definitely welcome to go and test them when you have the indicators, because you can pretty much pull up anything. Like for example, here, if you want to trade Netflix, this is one thing that someone was asking me about the other day. I don't trade stocks, or I used to trade stocks. I don't trade them anymore, but you can see that the same strategies work here on stocks as well, right? You have a sell entry right here. If you're applying the pivot strategy, it works perfectly fine, right? You're applying the pivot strategy here on Netflix, which someone asked about the other day. Full TP right there. Another sell entry right there, full TP right there, right? It just depends on what you want to trade. But what I would recommend is that you guys actually go and back test it, because I can't give you any guarantee that they're going to work because I don't use them myself. Same with gold over here. If you want to apply it on gold, I mean, same situation, right? If you have a pivot strategy or a high-low strategy or a V3, or I mean, whatever you guys want to apply, there's different opportunities here which you guys can take. Like for example, I probably wouldn't trade gold on the 3-minute. I mean, maybe you want to go on the 5-minute. So let me go on the 5-minute right now and see if there's anything here. Let's see if I can find something. All right, so here's a perfect example right here. If you're playing the V3 on gold, which I don't trade myself, but you can go and back test it to see if it works. We have an entry right here, right? There's a low right there. It's followed by a green candle. We have a pending buy right there. You take this for a buy, long position. Your stop loss. So this is the problem with applying it on different assets. I don't know what's a good range, right? For US 30, I know what the good ranges are because I trade it every day. I don't know if this is too tight of a stop loss or if it's too big of a stop loss, right? So depending on like your experience with trading gold, that's where you would set it. So I'm not sure if this is too tight, too wide. I guess you can just see if it applies here. Set it to 160 pips, you let it run, full TP off the next candle. So it works on gold. It's just you have to figure out if it's like, the main problem here is just figuring out the stop loss. I think that's the main thing. You can apply every strategy, it just depends on the stop loss. Because in some situations you might need to have a wider stop loss or wider TP. But you know, you would have to know like what the ranges are like for these specific assets, since I don't trade them. Let me see. Okay, so that's it for that right there. Question from Miles. Miles is asking, how long is the bias info valid each day? And Miles is asking about fundamentals, IG sentiment. So I mean, the bias changes at any moment, Miles. I mean, you have to check to see. Like right now, I can't check because the market's closed, but you would just check. It's easy to check. You just refresh IG sentiment. 55% long. Looking at the futures data, it's currently 62 points in the red. Market's technically closed right now, so I wouldn't use this as your bias, but you can pull it up at any moment. I mean, the bias isn't always going to be the same. There's no set period of time for how long it's valid for. It's valid for as long as it's valid, right? You'd have to go and check. So you can check right now and you'll see that right now the bias is a sell, right? Reason for it being sell is that 55% of traders are long right now, meaning that they're buying. You want to do the opposite of majority of traders. Looking over here at the fundamentals for the day, it's 62 points in the red. It's not a strong bias, but the bias is for a sell, right? So, I mean, it just depends on when you're looking at it, how you're using it, and what other confluences you're using for this. So there's no specific time period. Miles is asking, what time does it close for the day before? I meant, oh yeah, so the market closes, it depends on your broker. US 30 for FTMO, I think closes like at 120 Pacific time. It's 240 right now. So it closed about a little over an hour ago. Some brokers, they close at 2. Some brokers, it closes later. Sometimes it closes earlier. It just depends on your broker. So you'd have to check that with your own broker. But the day technically closes at 2. I think 2 is when the market is closed for US 30, and then it swaps into the next day. So this is where the day starts brand new. And you can see right here, the last time it was updated was at 4:59 p.m. Eastern. So it's about 2 o'clock when it shut down. So I mean, it just varies from broker to broker, Miles. But yeah, if you're identifying the bias, this stuff, like the daily turns off at the end of the New York session. The futures is technically open 24 hours aside from the swap. So this year will keep updating when the market reopens at about, I don't know if it's 5 my time or at 3 my time, 5 Eastern. I'm not sure if it's because I don't trade during those periods. I can't remember what time it opens, but if it does open at 3, this will start to update again. But this is updating at all times, the sentiment. It just depends on when you're looking at it. No, FTMO is 120 Pacific, Miles. So I wouldn't, well, I mean, you shouldn't be taking trades around that period anyways. So if you get close to closing time, it's technically 120. They sent an email like a long time ago. So they close slightly before because they don't want people to hold trades over the time period, especially on the weekend. So for me, from what I know from FTMO, from my knowledge, I think they close at 120 Pacific, which is 120. It'd be 4:20 Eastern, but I can't say exactly when. I mean, you probably, if you want to really know, just go and message FTMO, go to this report, and then you can ask them and they'll let you know the exact time. I don't know if it's changed since then, but last year when they sent out the email for the updated times, it was 120. Ian is asking if there's a possible V3 alert. So there's no alert setup for V3. Alina, the problem, you can't set up an alert for that because there's different requirements using different indicators. There's alerts that you can set up for the momentum indicator, but you can't set it up for the others. So like looking over here at the strategy, there's different requirements here. So you can't set up an alert for all of it. Like for example, you can't set up an alert to identify, because the thing is all of these have to line up at the same time. There's different things here. You'd have to have one indicator or an alert set up for the low or the high. You have the alert set up for the momentum. You have the alert set up for the following candle. So it can't set up for the actual strategy. You can set it up for specific indicators, but not for the entire strategy. Whitney's asking what's the difference between the V2 and the V3. So the V2 and the V3 are different requirements. So here's a V2. So for the V2, you're looking for a high low, and then you're looking for a strong candle after it. So let me see if I can find an example here. Here's one example of it right here. So for the third requirement here, you're looking for the candle following the high low to be a strong candle with no wick on top for a sell or no wick on the bottom for a buy. Looking at this right here, we have low. The next candle following right here is a strong green candle. This technically would be a V3 as well, but if you're using the V2, this requirement isn't the same for the V3. You don't need a strong candle, you just need any green candle. So that's the difference between the V2 and V3. This would be considered a strong green candle because there's no wick on the bottom side. This basically indicates that price came down and then it pushed up with no retracement. Like it literally just pushed up and didn't come back down at all. So this would be a V2. Exactly, yeah. So yeah, Whitney's asking, or she said, so the V2 could be a stronger move, definitely, yeah. Because if you get a strong candle like that, you know, odds are price is going to keep pushing up. Like if you go back and just look at all these strong candles, like again right here, there's no entry here, but you can see there's no wick on the bottom. Strong push to the upside, right? Again right here, right? You have a strong green candle. It's followed by a strong push to the upside. So yeah, technically it could be a stronger move, but it's not necessarily always going to be a stronger. Oh, Victor, gotcha. Yeah, no, I get you, Victor. Yeah, because Victor says Victor, bro. It must be my wife's Zoom. Yeah, because I wasn't sure who Kiara was. Yeah, but yeah, Victor, basically it can be a stronger move right there because it's a stronger candle. You know, you're experienced with identifying these candles here, so you kind of know what I'm talking about with regard to the strong candle here. That's the main difference between the V3 and the V2. But I mean, they line up sometimes the same way. Like for this right here, this would technically be a double confluence because it's two strategies in one. It's the V2 and the V3. So if I saw something like this, I would for sure take it and be fully confident because the more confluences you have, the better, obviously. So like with this right here, if I was to take this trade here, I would have gone full outsize and I would have been okay with just letting it run. So letting it run, full TP off that next candle because it's such a powerful move with the entry candle right here. So yeah. And this is stuff that you guys will pick up. Like, I think the highest quality trades are whenever there's multiple confluences. So if you guys have followed me during the live, you guys have seen that we have this triple confluence. Whenever we see this strategy right here, we used for about 5 or 6 months and we had no losses, like literally no losses. So this is basically combining so many different strategies. This strategy right here was basically three strategies in one. So we were looking for a high-low scalp. We were looking for an intraday momentum entry. And we were also looking for a pivot scalp entry. So I applied this strategy almost every day from like September up until like January. And if you guys watch every live session from like, I traded live every single day from September up until, or I don't know if it's September, maybe October, up until January, you guys can see that we took 0 losses during that entire period because we applied this strategy here. So when we refer to multiple confluences, we're talking about multiple strategies because each strategy here has a high win rate already. Like each strategy has at least like an 89% win rate. So if you're combining 3 strategies that all have very high win rates, that trade is almost going to be 100%. So pretty much that's what you would use as a confirmation. It's not necessary, but you know, I like taking high quality trades because I don't like to lose any trades. So for me personally, I'd rather wait for one of these, either triple confluence, double confluence, quadruple confluence, one of those entries. And if I see one of those, I will go full lot size because then I'd rather just take one trade, make a couple $1,000 rather than taking like 10 trades and then lock in like $300 each, right? Because then that just increases the risk because one loss could set you back pretty far. I mean, if you're using a negative risk to reward. So it just depends on which strategy you guys are applying, but I would recommend using a multiple confluence for whichever entry that you guys decide to take. So that's it for this right here. Let me go over here real quick. So I'll just go back to your other question right here, Victor, because you did ask about the sessions and why they're important. So these sessions right here are important because the market is still open all day. So even though we're only trading US 30 during New York session, and a perfect example is how the market moved today, right? So if you turn on the sessions, and I'm just going to turn on the sessions and turn everything else off so that you guys can see how important these sessions are because they do play a big role, even though we're only trading during New York. So let's go back to 6:30 over here. 6:30 was right here, market open, right? All right, so market open right here. These sessions are going to be the high lows of the previous sessions from the prior days. So like, for example, your price pushed up on market open, it bounced right off the Asia low. Even though the New York Stock Exchange wasn't open, the market was still moving during Asia session, right? So this is why it's important because price comes back and retests these areas. So it doesn't necessarily mean that these are irrelevant. They're still relevant because the price was still moving around that time. One way to tie this together with logic is bank algos, right? So if you guys have ever done any research on like algos that institutions use in big banks, basically they have robots that trade at specific price points, right? Whenever price reaches an area, one of the specific areas is going to be the previous session high lows. So you can see right here, price keeps bouncing around this area, and this is usually why I don't want to trade. So at this point, I don't like trading around this area because you can see from this point, you kind of see a pattern here, right? Price keeps going back and forth because what can be happening here is that there's different bank algos trading around this area. You know, I can't guarantee that that's what's happening here, but it's pretty obvious that price is failing to break out of this area because there's probably an algo selling here. There's an algo buying here. So as you can see, price just bounces around this area back and forth. And it's very volatile. It's not like small little moves here. It's spiking up, bouncing off, spiking down, bouncing off. And this is why it's important. You can see again right here, price comes below here. And where does price bounce off? The same low that we already had marked up from the day before. This is the New York low from the prior day. Right? It bounced directly off the session. Again, right there, price keeps bouncing around this area. It breaks below it. And then now it just keeps spiking down every time something comes below because this bank algo probably sells. So whenever price comes up and tests this area, it just keeps bouncing off it. So again, right here, comes back up, bounces right off it, comes back up, bounces right off it, comes back up again, bounces off that area. And it does the same thing, right? It fails to break above it because it can't pass this area here. And that's why it's important. You know, maybe I could be right with my analysis here, maybe I could be wrong, but this is something that I see happen almost every day. And, you know, just basic logic. If you see something bouncing off that area, you should probably stay away from that area. So this is why we use the sessions, even though it's outside of the New York session. Like I still look at Asia lows, Asia highs, New York lows, whatever it may be, because price still respects it regardless. So right here, you can see price respected this area all throughout. Right here was the London low. The reason why the London low came up right here is because London overlaps with the US. So this is what London low was the previous day, because this day finally ended for London, and then now it's created a new day. So again, right there, price bounces around. And then if you just follow it, you can see that price does respect these areas. Again, right here, price broke below. And what happened when price broke below, right? So it established the London low right here. Price broke below here, and then it retested. You guys can see the wick right there. And it just drops further. Comes back up. Some more retests right there. Then it comes back down. So this whole area right here, price is failing to break above it because this is now considered one of the lows from the previous sessions. So you can see how price moves around this area, right? This is why I don't trade around the sessions, because they're important. And then you can see right here, see how price spikes up? I mean, it's pretty much textbook, guys. You just look at where price is currently at. Look where price bounces off. There's a New York session right here. See that? It's no coincidence. Price comes back below, gets stuck around this area. Same thing, right? This candle right here, where does it bounce off of? Bounces off the New York low. Again, right here, where does price start to bounce around from? It is the same pattern. So you can see price right here breaks above the Asia low, comes back for the retest, kind of bounces around that area before it breaks outside of it. Again, right there, right? No coincidence there. And then look where price is getting stuck around, same area. So this is why we use the sessions, even though it's outside of that session, because they're still important regardless of the fact. Again, right here, look where price bounced off. New York high, exactly. All right, so I think that's it with that question right there. So let me just take that off the list. Victor, I'm not sure, is there any further you want me to go into the sessions? Because I think probably makes sense to you at this point. All right, perfect. No problem, Victor. All right, so Miles has a question here asking, so wherever the bias close? No, Miles, so the bias is always changing. It doesn't matter where the market closes, bias changes all throughout the day. It doesn't matter if it's New York session, Asia session, London session, bias is going to change. The number doesn't say that forever, right? I think that's something that you're kind of not understanding with my explanation here. This number changes. The market's closed because you can't trade right now. If you wanted to take a US 30 trade, it wouldn't let you take a trade. But when the market reopens, it's going to refresh again. So I think that's something that you're kind of confused with. Just because the market's closed for 1 hour doesn't mean that the market's going to be closed for the rest of the day. It's going to change when the market opens. That's why it says unchanged here, because there's no updated data. When the market opens in the next couple minutes, it'll start moving again. So the bias changes all throughout the session. It's just the swap right now. You can trade right now if you wanted to. So it wouldn't make a difference because there's no bias. The market hasn't opened yet. So does that make sense, Miles? I just want to make sure you're getting it because I feel like you might be a little confused with how the market changes between sessions. Because the market only closes once a day. When it switches from Asia to London, market overlaps. It doesn't close like it did right now. This is why it's called a swap, because the market is swapping from February 16 to February 17. So I just want to make sure you're good, Miles. All right, let's move on to the next question. Oh, gotcha. Okay. Yeah, no, so you get it, Miles. So just want to make sure you get it because I don't want you to get confused with following. Because the thing here is like if you were to trade off the bias before market close, the thing is that the bias is going to change directly when the market opens. So, but yeah, no problem, Miles. All right. So the next question here is from. All right. So I went over the K2 indicators, went over the V3 strategy, went over liquidity areas. One other question here was for the high-low strategy, so I'll go over that real quick. If there's any other questions, guys, feel free to put your questions in the chat. We've been on this live for about an hour, so I'm here to help you guys out. So if you guys have more questions, put the questions in the chat, and I'll add them to the list. Otherwise, we'll have another session next week. So even if your guys' questions don't get answered today, it's fine because we have this every week. It's not like you guys are missing out on opportunities to ask questions. So let's go over the high-low strategy real quick for Victor, I believe, or I forgot who asked for it. But so for that strategy, we use the high-low indicator and we use the, and I haven't applied the strategy in a long time. Okay, momentum indicator. So let me see if I can find an example here. Right, so here's an example right over here. Let me just go back to, or let me just draw the high right here. Actually, it's not a good example because it's really close to it. Let me see if I can find another one. Not this one here. Not that one. It's hard to apply this strategy during choppy market conditions because you'll see that these highs get tested multiple times and it doesn't provide for clean entries. Let me see if this is one here. No, it's not. All right, I'm gonna have to go back a little bit because I don't think there was any clean entries for this recently. No, not for that. Not for that either. Yeah, because this usually works really well when the market's moving smoothly, but it hasn't been moving smoothly the past couple of weeks now. Let's see if I can find one. Nothing there. And these market conditions lately have been okay. So I think there's one entry right here. I don't. This was from this morning. It was pre-market. Let's see if we can show you this. Oh, actually, sorry, it's not. Right here, it bounced off it, so it's not an entry. It might be this one. Okay, so this is actually an entry right here. Perfect. I know they're hard to come by, so that's why we haven't been applying it lately. But here we go. So, all right, for this strategy right here for the high-low scalp, basically you're looking to identify a high or a low that's been established. So looking at this right here, in order to establish it, you need 5 candles to pass before it touches it or breaks below. So this low right here was established because we have the low right there, and then we count 5 candles after it. So after this candle right here, there's 1, 2, 3, 4, 5. The 6th candle right here is the one that broke below it. So for this strategy right here, we have the the first requirement met because we've already established the low. For the second requirement, you want to confirm that price is breaking and closing past the previous swing. So this candle right here broke and closed past it, right? That's going to be the second requirement. The third requirement is that you want to confirm you're trading in the direction of momentum. So you don't need a momentum signal on the entry, but you just want to make sure that you're trading in that direction. So right here, the most recent signal is a sell signal. So momentum is currently moving down. That's going to fit the third requirement. So you're only looking for sells at this moment. With that said, you have requirements 1 through 3 met. Next, you want to make sure that price is not ranging or consolidating. You can see that prior, before this candle breaking below, it was ranging between these two price points, this low and this high, but this candle broke below it, so it's no longer ranging. It's now moving directional. The fifth requirement is that price has not touched the previous swing before the breaking close. So this candle right here broke and closed before it, or broke and closed for the entry. You just want to make sure that every candle before it does not touch it. So it hasn't touched it since the low was established, and that's going to confirm the entry. So you enter right here for a sell. The TP stop loss for this was, it was 30.20. I mean, you can change it up if you want. It just depends on how you guys want to apply the strategy. But if you want to use the original parameters, it would be the negative risk reward. A lot of people don't like using this because people don't like trading negative risk reward, but this strategy is a very high win rate strategy. When we first started applying this, the win rate was just crazy. I mean, it's still pretty high, but we just don't see as many entries come up. So right here, if you were to take this trade, would have pulled back a little bit. This is why we need the wide stop loss, because sometimes this will happen where price will swing above, but then it'll come back down. So right there, price came down and then hit TP. So as you can see right there, this is the high-low strategy. Oh, this is for Kevin. Okay, Kevin. Yeah, no problem. I forgot who asked for this, but there is an example right there. Does it make sense, Kevin, or do you want me to go over another one? I can try to find another one, but these entries haven't came up very much lately, so it's going to be hard to find, but I can look back if you'd like me to. Okay, cool. So Kevin, you get it there. No problem. This is still a good strategy. It's just, if you're able to find it, usually you have to be really quick because you'll see a lot of erratic movements in the market and it'll just randomly come up. But what I would recommend is, if you guys want to use the high-low, I would instead look for a triple confluence. I know this wasn't a triple confluence because you need to have a momentum signal, but if you could find one, it's like almost guaranteed to hit. I don't know if I could find one here, but if I do see one, I'll show you guys, because those are the ones that are really good. Like you take those and those are like almost for sure going to hit. But you're not going to find one anytime soon because there just hasn't been very many triple confluences. All right, another question from Barack. Barack's asking about the mid-mark reversal. Let me just scroll up to see what he asked exactly. So let me go up real quick. All right, Barack was asking. Barack asked, sorry, I'm like trying to figure out what his question was. Okay, so Barack said, is the mid-market reversal something we have rules for? No, it's not an actual strategy, Barack, because it's not like there's no set requirements for it, right? The mid-market reversal just happens throughout the day. So like, for example, right here, this is where it happened today. So let me just go back to here. Basically, the way that the mid-market reversal happens, guys, is that market tends to reverse around a specific time each day. So let me just mark up certain times here. Let me just go over here real quick and take everything off real quick, because you don't really, this is a speculative strategy. It's not something that you could just apply every day because it doesn't happen every time. It usually happens when there's a lot of liquidity sitting in the opposite direction from where price is moving for the day. So here is when market opened. And if you guys go back and just back test the charts, you'll see that the market usually moves the same way pretty much every day. There's different phases, and this is why I stopped trading around certain times. So let me just mark this up here, and I'll kind of draw here to show you exactly what I mean by that. All right, so the market opened right here at 6:30. Basically, from market open until 7, there's some sort of direction that's being set with the market, right? So for example, right here, price faked out to the top, but then it came down. This was the actual movement to the downside, right? So right here, price was moving bearish from 7 to 8. It usually continues in that direction or reverses. So like right here, it was continuing to be bearish. It just kept dropping lower. From 8 to 9, this is why I stopped trading at 8, because price tends to consolidate a range. It just goes sideways. Again, right here from 9 to 10, you'll usually get some more consolidation before price spikes in a direction. So right here, consolidation for like a while. Let's see how long. For like maybe 30 minutes, just consolidated for a bit, and then it dropped lower and then went back into consolidation. From 10 to 12, you can see right here from the entire day, right? The entire day from market open up until 10 o'clock, price was in a downtrend, right? It was in a clear downtrend, obviously. It's been going down. So the mid-market reversal is when price goes opposite. So right here, you can see price was still consolidating between 10 and 11. And then right here is when the mid-market reversal tends to happen from now until market close. So the way that this works is when price gets closer to 10 or 11, you want to go and identify where liquidity is sitting, right? So let's go over here real quick. And from this point, I will draw all of the liquidity. So, or the high lows, which are considered liquidity areas. So right here we have, and you're going to draw liquidity where price hasn't tested yet. So right here, these already been tested. So they're no longer considered, liquidity areas. You just want to go to the areas where they haven't been broken yet. It's okay for them to be tested, but not to be broken. All right, so price is obviously trending all throughout the day. And there's barely any liquidity on the bottom side, right? Liquidity is sitting all above on top. So let me turn everything off. So right here, one thing that you could have done to catch the breakout to the ups or the mid-market reversal is you can apply a strategy and ride it on its way up. So for example, there's no strategy to just ride this all the way up, but you can see that there's a lot of liquidity sitting right here, right? There's liquidity right here, a ton of liquidity right here, some more right here, all the way up until here, right? So if price comes and touches this area right here and hits liquidity, where is it going to go? To the next area, right? If it touches this area here, where is it going to go? To the next area. And where's it going to go from here? Probably all the way up to the top. It might not necessarily get that far of a push, but odds are it'll probably reach that area. So in order to identify an entry to catch this mid-market reversal, if you want to use one of the strategies, like personally, I would use the V3 or the V2. So let's see. There's no V1 or V2 here, but I'll see if I can find like some sort of entry here. So price hit liquidity right there, and then it went to this next area. Where is it probably going to go next? It's probably going to push up to the next area, right? So pushed up right there, pulled back a little bit. Okay, so right here, you can see that we have a low, right? What's the next thing that can happen? A V3. So even though liquidity was hit here, it can still come up and push up and break through it again. Because when it tests it twice, that it's usually a better, it's going to be a bigger push because it just faked out and then now it's probably pushing up even higher. So right here, we're looking for a possible V3. There goes the green candle that you're looking for, right? This is a V3 entry. So price is likely to come back up and hit the rest of liquidity because here's the thing. Price has hit liquidity here, but it didn't push up to here yet. There's still areas here to be hit. So with that said, we have a V3 right here. It's kind of too big. So if I saw this, I probably wouldn't have taken it, but depending on how risky you want to be, like, as I mentioned, you guys have the strategies to apply yourself. You can do whatever you want. You don't have to follow the strategies as they're taught. But if you're looking to take something riskier, you can do something like this. This is a 900 pip move. So if you were to take that V3 there, let it run, full TP, right? So that's how you would apply it. There's no specific strategy for the mid-market reversal. One thing that you would do is the same thing we've been doing. So it doesn't necessarily only apply for the mid-market reversal. It happens anytime. It can happen on open. It can happen in the middle of the market. You just want to identify where the liquidity is sitting, take a variation or whatever strategy you're applying in that direction, and then you can pretty much just write it up. Yeah, exactly. And like what Rick said. So Rick said, but today was FOMC minutes, which messed with the normal midday reversal a bit. So that's exactly why I wouldn't have taken it as well. I didn't follow that there was a FOMC because I don't trade during that period, but that's probably what caused this choppiness over here. Normally the move is pretty smooth, but today it was super choppy because, you know, like Rick said, there was a FOMC minutes meeting that came out today. Henry's asking, what was your TP stop loss on the mid-mark reversal? So as I just mentioned earlier, Henry, there's no strategy for it. So there's no mid-mark reversal TP stop loss. If you wanted to apply a V3, your stop loss would be over here because that's what the requirements are set for, right? You place it at the previous low or previous high, depending if you're taking a buy or sell. There's no strategy for mid-mark reversal. You could apply whatever strategy you like, and you would set your TP stop loss for whatever that strategy requires. So it just depends on which strategy you're applying. If you're applying the V3, you'll place it at the previous swing. If you're applying the V2 or V1, you'll place it at 300 pips. It just depends on which strategy you're looking to apply. So it's strategy based. It's not based off any mid-mark reversal set TP stop loss. Gosh, yeah, Rick said that move up was right at news. Yeah, so that seems like that was the case here, that it was a fake out like around news time. I think it came out at 11, right, Rick? Right here at 11. So price spiked up, came back down, and then it came right back up after. So if that was the case, I wouldn't have taken it either way. Yeah, no problem, Chris. If you have any other questions, feel free to reach out. I tried to cover everything, so I think you got a pretty good gist of it. There's going to be different strategy videos on the course, so you should be fine reviewing those once you start applying it yourself, but you'll learn it better that way. All right, guys. So there's no other questions here. If you guys have any other questions, feel free to put your questions in the chat. We've been on this mentoring session for a little over an hour now. So if you guys don't have anything, we'll probably wrap it up. And then if you guys have more questions, we'll be back with this next week. Let me see if I have my schedule already. All right. So next week looks like our session might be on Friday. That's okay with you guys. Or actually, sorry, I take that back. My calendar was off. Next week, the session will probably be on Wednesday or Thursday. So one of those 2 days. But yeah, guys, I think that's it for this session. So if you guys have any other questions, feel free to email me or message me on Telegram. Hopefully, you guys got some value out of the session. Victor's asking, has FTMO stalled on payment to you? So last month they had an issue with their processor. I don't know if it's like, it was like a one-time thing where I couldn't put in my information for my banking, which they've already had, but for whatever reason, it was just kind of an issue. So it stalled for like maybe a week and they fixed it. But for the most part, they've never stalled. So if you ever go and put in, like when you request for the invoice, they'll send you an invoice and they'll say, okay, this is how much you made. They'll give you the invoice. It's usually sent 15 days after or less. I mean, depends. If you've been a regular with them, it comes a lot quicker. But if you're new, it might take some time because sometimes your bank might reject the payment because it's coming from the Czech Republic. So, your bank might be suspicious with like where this payment or money's coming from. So I don't think it's ever stalled on their end, aside from what happened last month, but your bank might be rejecting the payment. So that might be an issue, but it'll be covered. I mean, you just got to let your bank know that it's something that is that you approve, that you're not just getting like random money from like the Czech Republic company. I've never accepted payment from them in crypto. I know that they do bank transfer and they do Skrill. So Skrill is basically like the international PayPal, but I've never done it through crypto. Maybe they do now. I've been with them for a long time and I haven't really changed my payment option. I just do bank transfer, which is a wire. But you can probably ask them. They probably do it now since, it's such a big thing. Henry's asking, will you do a session on how to handle taxes on a foreign account? So I'm not a tax advisor or a CPA, Henry. You'd probably want to ask your own CPA. I mean, it just depends on it's going to be the same way. You'd have to report your taxes either way. So if you're talking about a foreign account, you still have to pay taxes on whatever you withdraw. But that's probably a question you want to ask your CPA, because they probably know different loopholes and different processes to get around it. But for me, for FTMO specifically, it's like a 1099 self-employment. But from Hugo's way, I gotta figure out myself how to do that. I'm doing my taxes next month, so my CPA is going to talk me through that and see. But you're better off asking like an actual CPA to go over those details with you, because I wouldn't have the details to cover that, and I wouldn't be the proper person to be discussing that. So I think that's it, guys. So other than that, I will see you guys tomorrow for the next live session, and we'll pick back on these mentoring sessions next week. So, all right, guys.